Hello everyone. In today's video, we would be discussing one of my most favorite pattern, that is Wolfe Wave. It is one of those patterns that could be converted into the absolute trading system because it has pretty high accuracy as well the high risk to the reward ratio. Wolfe Wave is one of those natural pattern that already exist in the market due to the imbalance in supply and demand. It was discovered by Bill Wolfe, sir. It is four-leg pattern, and looking at the structure of the wave, it is an advanced chart pattern based on channel and wedges. So before jumping into Wolfe Wave, let's visit what channels and wedges look like and understand them in brief, so it helps us further in identifying and understanding Wolfe Wave. The first one we have is a wedge chart patterns. It is basically a contracting range of security. The price keeps oscillating between a particular range, and that range keeps getting smaller and smaller. If the range of the price is moving on the upside, it is a rising wedge, which is a bearish structure, as we are expecting a breakout on the downside. Similarly, if the range of the price is moving on the downside, it is a falling wedge, which is a bullish structure, as we are expecting a breakout on the upside. The one on the left here is the rising wedge, while the one on the right is the falling wedge. The channel chart patterns are easier to understand comparatively, as price keep moving in the range here as well, but the range keeps same. If the price is moving on the upside, it is called an uptrend channel. Similarly, for price range is moving downside is called downtrend channel. Since we have understood the channel and wedge patterns, we can move to the Wolfe waves. The bullish Wolfe wave structure is similar to falling wedge or downtrend channel. Bullish Wolfe Wave is a four-leg pattern with point 1, point 3 and point 5 as end of swing low, with point 2 and point 4 as intermediate swing high. The point where the trend line formed connecting the swing highs and the trend line connecting swing lows meet is called the estimated time arrival. And the line connecting 1 to 4 is called the estimated price arrival. In an ideal trade based on Wolfe Wave, the price is expected to touch estimated price arrival before the estimated time arrival. When we enter the trade after it bounces of the point 5, we would be expected to be in the trade till price doesn't touch estimated price arrival line. The identification rules for the bullish Wolfe Wave are as follows. The point 2 is a top. The point 3 is the bottom of the first decline. The point 1 is the bottom prior to point 2 that is top, that point 3 has surpassed. The point 4 is the top of the rally after point 3. The point 5 is the bottom after point 4 and is likely to exceed the extended trend line of 1 to 3. This is the entry point for a ride to the EPA line, 1 to 4. Let's see and understand the Wolfe Wave in a real chart. Here we have chart of LT, time frame 1 hour. The price range has formed a downtrend channel. The point 1 is the swing low. Point 2 is a swing high. Point 3 is the swing low making new lower low. Point 4 is a swing high and lower high, and the point 5 is the new low formed. For us, as a trader, our job is to find the trade, and enter at point 5, only when the price reverses, and ride the swing till estimated price arrival. If the price keeps going in the same trend that is downside over here, it is big no trade for us. The bearish Wolfe Wave structure is similar to rising wedge or uptrend channel. Bearish Wolfe Wave is a four-leg pattern with point 1, point 3 and point 5 as end of swing high, with point 2 and point 4 as intermediate swing low. The estimated time arrival and estimated price arrival stays same, as discussed in the case of bullish Wolfe Wave. The identification rules for the bearish Wolfe Wave are as follows. The point 2 is a bottom. The point 3 is the top of the first rally. The point 1 is the top prior to point 2, bottom, that 3 has surpassed. The point 4 is the bottom of the decline after point 3. The point 5 is the top after the 4 point and is likely to exceed the extended trend line of 1 to 3. This is the entry point for a ride to the EPA line, 1 to 4. Here we have chart of the Nifty in the daily time frame. The price has formed an uptrend channel, and the point 1 is the swing high. Point 2 is a swing low. Point 3 is the swing high and a new higher high. Point 4 is a swing low but higher or equal low, and the point 5 is the new high formed, from where the price got rejected, and we actually saw the COVID-19 crash of 2020. We enter only when price reverses, and ride till the estimated price arrival. And it is not a trade if price is able to keep the prior trend intact, that is uptrend. I know I have not placed any charts which resembles to the wedge pattern, so to see such charts and Wolfe Wave analysis, head over to my Telegram channel, that is Wolfe Wave Tracker, and link is below in the description. So with this we are finishing the basics of Wolfe Wave and its identification. If you have any question, feel free to post in the comments. For the next week, try to identify as many as Wolfe Waves you are able to find. It forms in all time frames, and 5-minute time frame is my favorite because I am an intraday trader. If you find one and would like to get it validated from me, drop the TradingView chart link in the comments and I'll validate it for you. That's all for this video. In the next video, I'll show you how you could accurately pick out a possible, high potential Wolfe Wave. Stay tuned. Make sure to like and subscribe to my channel.